Hey guys, welcome back to the channel. So in this video I'm going to be showing you guys an example of how I use Fibonacci's in my trading, Fibonacci's replacements to be exact. So coming on to here on TradingView, I will go to my Fibonacci retracement, and from a start of a trend to the bottom of a trend, for example right here on SPY we have the start, which is basically the peak of our downtrend, and we have a big point where we bounced off of, right? This big bounce point right about 360 level. So from here, I would draw the start of my fib at the top all the way to the bottom. We can go over my settings real quick. I got rid of everything on here except the 0.618 and the 0.5. I made it both one color. I gave it a little bit of background so I can see in the little space where I want to look for a bounce or rejection, and I extended my lines right so I can see how far ever the zone is valid, right? And so from here we have a big high, right? So this is the 2-day chart. We could even use the weekly chart, but basically this is the big point of resistance and this is the big point of support. So depending on whatever time frame you're looking at, you always want to find a big point of importance, right? And so a high and a low are the biggest points of importances. And so I drew it from there, from top right about that 480 level to that 360 level. Then it gave me this golden zone, which is between the 0.5 and the 0.618, right in between 421 and 435, right? And so I knew that in this zone we were going to reject, right? Because we bounce off of the golden zones. So the moment that we started to climb back up in here, based off of multiple different confirmations, but this is one of my confirmations, the Fibonacci's. Once we were in the golden zone, I was starting to load up my puts because I knew that we were going to reject out of it. And so I was loading up 410 and 400 puts, just because I knew that when we come from here to here, we were expecting to come back to this kind of trend line. So even if we wanted to get kind of a expectant place of where we're going to go based off of where the price action is currently, I would just click on my fibs, which I just did. I can do it again. I would click on my fib. I would draw it from the low to now the current high, right? So big price action, or big importance to another big importance point. And then the golden zone now is right at that 388.74, right? So this is where I'm expecting us to bounce from here, right? And basically where I'm expecting us to go to. So whenever I get puts, I got that 400 put right above the golden zone, so I knew that it would go right in the money, right? And I like contracts that are out of the money that have a big potential to just go barely into the money, and I really get as much of that percentage gains as possible, all right? And so we went right to that 0.618, boom, and then we bounced off again. And then if we wanted to draw another fib, it's already getting very tight here, but from, let's see, that's the low, from there to there, now we see a rejection in this golden zone, and then boom, we start to come back down, right? And so fibs can just be used in about any time frame, however much you want to use them. Just find big points of importance, whether it's big lows, big highs, or just a very big pivot level of any sort. And so that is how I use Fibonacci's into my trading plan and with examples. Hope you guys liked the video.